What's up guys, Cryptomindd here and welcome to the first video of this quote-unquote more advanced type of knowledge. Welcome to the advanced playlist slash course, whatever you want to call it at this point. Let's just get into it immediately, right? Let's talk about futures trading. So for people who do not know what futures trading is, first of all, go to Google and you'll easily find it out what it is. Futures trading. So shortly said, it is leveraging with your money. So let me write this all down. Using leverage on your money. This could be an X2, an X3, an X4, an X10, an X20. I don't know, certain decentralized exchanges do even an X1000. There are certain gamblify platforms who as well provide X1000 leverage. So that's basically what futures trading is. You use leverage on your money. So basically meaning, for the people who do not get it, let's say you make what would I say? Okay, let's just say you make 10% in spot on Bitcoin, right? So you make 10% on Bitcoin in a spot position. So meaning that you just, if you put in $1,000, $1,000 becomes $1,100, right? Now, let's say you use leverage on your position instead and you do an X3. Your 10% becomes 30%. Why? Because you just simply go X3. So your $1,000 becomes $1,300. This is the most simplistic way to explain what futures trading is without getting way into depth about it. If you're really gonna go more into depth about it in pure detail, feel free to use Google, feel free to use YouTube. It's completely free. Make sure to check it out. It's very simple, but this is the very simplistic way of what futures trading is. You use leverage on your money, which then basically can result into making more money. Now, a lot of mostly newcomers think that this is great, but actually very dangerous. I am not a fan of leveraged trading whatsoever, not at all. I do not use leverage trading at all. I do not use futures. And if I do use futures, which is rarely, guess what? I'll make sure that I do not go above an X2 leverage, because it's just above X2, in my opinion, is more towards gambling, more towards people who want the faster money or who have smaller money who want to grow their capital. For me, that's not the case. I'm very confident and very happy with just using an X2 leverage. And if my 10% becomes 20%, if that is a profit or loss, so be it. I'm more than happy to willed to take that risk. The thing with futures trading is you have to be willed to take the risk. Because most of the newbies mostly think that eventually, okay, this is great, you can make a lot more money, and they are willing to take the risk, but they do not realize the danger. They are very unaware, and most of you are as well, with a lot more experience, that you are still very unaware of how dangerous leverage can be. And eventually, leverage, even though you are willing to take the risk, most of the people, guess what? Most of people end up losing or liquidating. Losing is okay. Everybody can have a stop loss being hit. But if you are new, there's a very high chance that you will not be stopped out, that your trade will not just hit stop loss. What will happen is that you get liquidated. What does liquidated mean? That let's say you put in $1,000 in a leverage trade, right? Your $1,000 becomes zero. That's basically what it means to be liquidated. All your money that you put into that trade is gone because you basically ran out of capital and your margin was very likely too high. The risk that you get liquidated with a X2 leverage is very low because nobody, and I repeat, nobody has a stop loss of 50 fucking percent. That just doesn't make any fucking sense. You can even, if you are more experienced in my opinion, use an X2 leverage on swing positions where you buy something very cheap because you know, okay, this might be really a bottom point or a local bottom, and you just build up your position around the bottom and boom, 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 boom. The same like an investment, but again, a little bit more risky, but the chances of having a 50% stop loss are slim to none. This literally means that price, let's say here on Bitcoin, you went all in, right? Has to do another minus 50% if you used an X2 leverage to be liquidated. Nobody has that amount of stop loss, and neither should you. Anyway, you should be very aware of the risks that come with futures trading. And again, I do not advise it. I do advise everybody to learn how to do spot trading. And again, if you want to go into leverage trading, use a max of X2 leverage. Believe me or not, but you will be more than grateful that you use this tip. Again, low chance of liquidation. That is the best part here for beginners, because a lot of beginners and a lot of actually experienced people still, once their trade goes into a loss and they only placed a mental stop loss, not a real stop loss on it could be Binance, could be on a decentralized exchange, it could be whatever, but you didn't place a real stop loss, only a mental stop loss, and then guess what? Liquidation incoming, liquidation incoming. With 50%, with an X2, that happens is still very low. But if you use higher, that chances of getting liquidated are very high. With an X5 leverage, it is not that hard to be liquidated in a swing trade. I mean, if you're a day trader and you still then use a 20% stop loss, it doesn't make any sense. But the dangers are real. And if you as well have some, how can I say, psychological doubts about yourself and emotional doubts about yourself in terms of trading, then it will just go into self-destruction with using high leverage. High leverage equals self-destruction. Guys, there is a reason why most of the people are not profitable with leverage trading. Most of the people are genuinely not profitable with this. And those who are profitable, like me, have a system in place that understands the market, that understands the time frame that we work on, and we understand that greed is our biggest enemy. We have no need at all to use an X5 leverage, to use an X10, X20. That doesn't make any sense. That's gambling in my opinion. We do it technically and calculated. Our goal is longevity. Our goal is to survive first of all in this market and slowly build capital. It's starting to compound. The problem with most of you guys is you want it all at once. You're gonna see one trade and perhaps you make even a good amount of profit. Let's say with $1,000 and you put in randomly an X20, and that at that moment that the price of that token explodes and you make 400%. Okay, so now you made a banking and you're gonna start to get super fucking cocky. So we can actually add this to the list. Once you make profit with high leverage, just gonna make it lev, you start to become cocky. Like a little dickhead. You start to become cocky thinking that you found the magic money machine, that you found the magic strategy, and then guess what the fuck gonna happen? Guess what the fuck gonna happen? Your $1,000 becomes zero, you're gonna get liquidated because you just got way too cocky. Guys, I do not say this for you to not make more money. I tell this to you to be a survivor in this market, somebody with longevity, that you do not always have to keep on using your money from your savings account or whatever to just fund your trading account, because that's what most people do. They just keep on putting money from their savings account into their funding account for trading, not investing, but trading in the hope to make faster money. And then guess what? Your money becomes zero. And then you end up losing, you feel like a loser, and then actually, respectfully, but you are a loser then at that point. And you're gonna start to feel a lot of regret with the things of, I wish I should have, could have, would have. That will come. We'll write this actually down. This will lead to should have, would have, could have. And this is not the feeling that you want, guys, believe me. The thing is though, you have to experience what it is to lose a lot of money and to be liquidated. I've been there myself. Everybody in this fucking space right now that has a lot of experience, who's already here for multiple years, have this experience with being liquidated. We know how it feels. So that's why you see a lot of people, a lot of experienced traders go for a very low leverage, guys. Guys, I see people with millions and millions building their positions with an x 1.2 leverage, x 1.5, 1.8, 2, maximum 2.2 that I saw in the craziest way. And I'm talking about 1 million, 5 million positions, like dollar positions. That's a lot of money, guys. And if those people do not use high leverage like x5, x10, or even an x fucking 3, why should you? You are basically broke, and you're gonna think that you found a magic formula by using high leverage, while the rich people and real whales and people with high knowledgeable skill in this space do not do it, but you with your little broke ass do it. Doesn't make any fucking sense. You have to learn from people who are experienced in the space and who know what they are doing. That's why it's so important to basically not fall for leverage trading scams in this space. And this goes for crypto, forex, and stocks. Do not fall for it. Leverage is your enemy. A lot of people think leverage is your friend. No, G. Leverage is your fucking enemy. Because that's what it comes down to. Leverage is your fucking enemy. And that's how simple it is, guys. It's simply your enemy. You do not want to over leverage. You only want to use an X2, and that's about it. This is a very short, basic explanation of my thoughts about futures trading. Again, this is not an in-depth type of video on what it is, how it technically works. It's just my thoughts about it, why you should avoid it at all costs. And if you do, make sure that you first of all understand what you are doing on lower and higher time frame, and never exceed an X2 leverage. You will thank me later because you will never get liquidated in that way, and your losses as well will be a lot lower than if you would use an X3, 4, 5, 20, 10, or whatever it is. Alright guys, see you in the next video.